Good morning, good morning, good morning. My name is Sean Dexter.
My name is apparently Krisha. And we welcome you to the Mango Grow for your daily
Bitcoin and everything else analysis update. But yeah, this is going to be, we usually kind of wing these videos, right? So we are first going to start off with our analysis, and then right after that, we're going to go into the rest of the macroeconomic humdrum. So let's actually start off with the dashboard. What do you think, Sean?
Looks really nice. Black. So what I noticed when you pulled it up is that Link, not just the BTC pairing, but the USD pairing is showing short as well. So what do you guys make of this? Bitcoin is going up, Link is going down. And to be honest, like when I was looking at the Link BTC chart, this was what, 4-5 days ago, we were talking about how we were actually arguing in the seed chat over whether it was a bearish pattern or a bullish pattern, and I'm like, that's looking like a head and shoulders distribution to me. And Krisha's like, no, it is a symmetrical triangle.
Okay,
like,
no, that's not how I sounded. But either way, though, I think I was leaning to the bearish side as well.
No, she said, since it's Link, I'm gonna say symmetrical triangle, right? And guys, this is a example of you shouldn't let the asset affect your bias, right? And hey, what do you know? We broke down. Yes.
All right,
I'm
fine.
pattern queen now.
He got
Look at
it
me.
now. He
Look at
takes
me.
the throne.
I'm the pattern queen now.
Good lord. Good lord.
I hope you guys get the movie reference. I know she doesn't. Do you guys know that she watched Aladdin for the first time yesterday? First time.
I don't know. It came out before I was born. Come on. You know, cut me some slack there. Okay, but no, Link actually flipped short 6 hours ago. 6 hours ago.
I'm still thinking about how you did not have a childhood.
Anyways, guys, back to the charts.
So Link flipped short only 6 hours ago? Okay.
Yes. So 6 hours ago, but Link BTC, Link BTC also flipped 6 hours ago. So we will be going over those charts. So for those of you Link fanboys and fangirls, stay there. But no, another one that flipped short actually 4 days ago was Bitcoin.
No, it's not. It's long.
Sorry, long. Apologies.
Okay,
I'm going
cool.
blind.
You're confusing.
Sorry, long. Was Bitcoin 4 days ago.
Bitcoin's long and Link is short. So
that was that initial push to the upside, right?
Yes.
So
are you bullish or bearish now?
I'm actually follow the system. Okay. For those of you who do not have a system in place, I recommend you sit down and create a system for yourself. And my system is telling me that I need to flip long.
Oh, is it? Okay.
So, well, I'm just following the system, right? I mean, you can't let the emotions take over there and you just trade like a monkey with your emotions on. What are your thoughts?
My thoughts are that, and I was talking to Sammy today about this too, we all tend to forget that there are 3 positions you can have. Short, long, and on the sidelines, right? And to you guys in the seed program, think back to the analogy that we started with, right? We're talking about how you are Achilles, you are a mercenary general standing on the cliff, watching these battles take place between the bulls and the bears, the emperors and the kings, right? You have no allegiance to being bullish or bearish, to this queen or that emperor. You don't care. You look at the side that is likely to win and you sell your services to that king or queen. And sometimes you just have to stand on the cliff like Achilles did and just watch, right? And then make your decision. You don't have to make a decision. You don't have to be in a position. So is your system really saying long? So go back to your system and think about that. As for me, what I can say is I have no reason to be short anymore. I have no reason to be bearish anymore, right? And it's very simple, right? And this is where technical analysis comes in, guys. Everybody thinks technical analysis is about being right and making money towards the upside or the downside. No, it's not about that. It's about knowing when your hypothesis is no longer working, or rather the market is not respecting your hypothesis, right? That, hey, you know what? It's not working out my way. I have to step back. Because you could be right. You could be the only right person on the planet. And you are not enough to move the market though, right? The market will figure out what you're thinking perhaps years down the line. You could be 2 years late. Now, I'm sorry I'm going on a rant so early into the video, but think back to 2008 financial crisis. People were going short 2006. 2007. And very few people were able to stay liquid long enough to cash in on being right. Okay, and I think Warren Buffett, now that holds a lot more meaning to what Warren Buffett says, right? The markets can stay irrational longer than you can stay liquid. I think it was him who said it, right? But this makes sense.
Yeah, it does.
You could be right about it being a bear market. You could be right about Bitcoin eventually crashing. It doesn't matter, because you will get liquidated, and that's what matters. Okay, so this is why I like technical analysis, because there's a line in the sand for you, right? And we were looking at that line in the sand for a few weeks now. We are going to be looking at this range over here. Once we break into or above that range, it's done.
So then let's actually go on to the charts. By the way, for those of you who are interested in the Mango dashboard, it is live now. I will include a link to it above as well as in the description below. There's a free version, okay, as well as a premium version for those of you who want to take your trading seriously and you want that extra edge. Okay, so now that's that. Let's get onto the charts to see what exactly set off our systems. At least my system, not ours. He is on the sidelines. He's Achilles on the on the hill, the mountain. What? On the cliff. But no, this one set my system off. I was looking at the weekly close. Right. So let's actually go over that.
You said you were looking for long at 7,500, right?
Yeah.
I'm not looking to long that. It's tempting.
I'm not looking for a long as such, but this is, I'm going to start reconsidering, where my allegiance lies. I'm definitely not going short over here. I do not want to go short.
We just wait for the breakdown.
Yeah, so I mean, if I get a retest of the major level that we broke, I'm looking to add to a long there. Okay, but where was this? So let's actually go ahead and put on the ribbon. Where is your ribbon, Sean? This is Sean's.
Let's just mark your horizontals, right?
Okay, yeah, let's
zoom in a little bit though, unless you needed this. Yes.
So we were right around here. So that was the one I was looking for a price to close over, and we did close over that, right? So let me just zoom in for you, and voila. Okay, that was the weekly level. I was looking for price to, hold as resistance or either take over, and what we did. Close over that that horizontal. So with this, I mean, I would be, I'm bullish. I can't see a reason to not be here.
I mean, you could wait for another candle close.
Of course, but with this, if you're just playing support and resistance, I would be looking for a move to 8K. Okay, now it's of course how it reacts off of this. So far we've closed over the weekly. However, if we lose it on the next weekly close, and this does happen to be a fake out, then I will be looking for further downside, right? So that is if and only if we close underneath this horizontal here at 7,582 for those of you taking note. But what are your thoughts on this weekly close now?
So this is why I'm just being a little bit more patient. If we see another candle close right above it, it'll be more convincing for me, of course. Like I said, you don't have to be bullish. You don't have to be bearish. You could be on the sidelines. But I have no reason to be bearish over here. Now again, it depends. Everybody may have a different system, and your system might be saying, hey, we are still sitting against resistance. And if you look at the daily time frame, actually no, I think today we took back the daily resistance as well. I'm not sure. I'm not even looking at the daily, to be honest, guys. So everybody's getting chopped up looking at the lower time frames.
Yeah.
And to me, lower is anything underneath the 3-day, all right? Anything underneath. You could go up to the 2-day and say longer time frame. That works too. But even the daily, guys, in fact, I think it was Hussein who posted a really nice stat in the Seed chat where he said in the last day, in the last 24 hours, we had 15 million liquidations on the long side and 15 million on the short side. So on both sides, on the same day, traders on both sides of the trade were losing.
It's messed up.
Okay, so it didn't matter whether you were going long or short, you lost.
Yeah.
So that's what we mean by getting chopped up on the lower time frames, right? It's a losing proposition. And unless you're playing the high time frames, it is likely going to be you as well. Okay, likely. The word is likely. Probability statistics says that, hey, you are likely going to lose on the lower time frames, no matter what side you pick. Okay, so this is what am I, like you said, if you break underneath this level over here, close underneath on the weekly, I'd be looking for 6,900 again.
Okay, so but what got you to say that? Okay, you know what? I'm gonna stand aside, and I want to see. I have no reason to be short.
Okay.
But, I just want to stand aside and see what price does here. So what were you looking for on that weekly close? Now, I was looking at this horizontal. Was there anything else besides the horizontal?
Weekly 21 EMA. We
Okay,
took that
so
too, by the
let's
way.
put
Like
that
it
on,
was
right?
weekly Tenkin, weekly 21 EMA, weekly horizontal. We took it all.
Boom.
We took it all.
So, I mean...
So at what point do I let my emotions and my bias say, no, I'm still going to stay short? Like, wait for the Kijun now? That's what people do, right? That's how they get liquidated.
Yeah.
They stay on the wrong side of, even their mindset stays on the wrong side. Now you slowly got to start switching your mindset. Hey, maybe I need to question everything I'm thinking, right? And again, today we were talking about this. It was Ashok who was talking about higher time frames versus lower time frames. The thing about playing the higher time frames is you stay clean, you stay on the right side of the trade for the majority part as a trend trader. But there's always going to be that turning point where you're going to be wrong on the trade, right?
Yes.
That's what trend trading is all about. When the trend starts switching, you are going to be wrong because you're still playing the trend, and the trend does not break immediately. It first the low time frame switch, then the high time frame switch, then the high time frame switch, right? But if you are always going to be playing the high time frame trend, you are going to have to wait for the low time frames to switch, and then you're relying on the high time frame to kick in, and it may not, and that's when you are wrong, right? But if you catch a trend like this, like we did, all the way to the upside, that's where it counts, right? And you need only like 1 or 2 of these a year. Now over here too, the trend switched on the lower time frames so many times. The high time frames kicked in, took us to 14,000, right? May not happen all the time. Trend trading is not easy.
No, it's not. Like the amount of patience that you need, and you need like this unwavering thing to just stay in your position, especially when markets are super volatile. Like look at these wicks here, right? So even just, staying in your position, holding on, having that patience, it goes a long way. Especially if you're a trend trader. If you're a trend trader, you know that, right, about these markets.
As a trend trader, get used to being wrong. Embrace it. It's going to happen. It's likely going to happen. So
now this is what we're looking at, but however, I noticed that some of the guys have been bringing things up like the 200 moving average on the some of the lower time frames.
No, don't look at anything else. Okay, this is my opinion. You guys, this is not financial advice. We're freaking closing the monthly in 2 days. People are looking at the daily and the 4 hour and the 1 hour. It baffles me. All right, look at your monthly levels. Look at your weekly levels. A lot's going to be clear. We also have the halving coming up 2 weeks after that, I do believe, which is why, what did I tell you guys? I am going to be playing every position, half position size. We have some big candle closes and big events coming up. If we close the monthly anywhere here, we are retaking the 21 EMA on the monthly. And that was the foundation of our entire bear case.
That's true.
Let's not forget that, guys. Okay, that was the foundation. If we retake that, I have no reason to be bearish. It's 2 days.
Let's get on to the monthly and see where price is relative to, well, our monthly levels, right? So let's just go in, zoom in there, and there we go. So that is the horizontal. I'm going to just knock that off. Just look at price relative to the 21 EMA. So the 21 EMA currently is sitting at, where is that data window? Okay, 7,350. Current price is at 6,428. So this is going to be a very, very interesting...
No, current price, that's the open. Current price is...
Sorry, 7,683. My bad. So no, this is going to be a very, very interesting monthly close. What are your thoughts on this?
I think we're going to come retest that at in the next 2 days. We do have that kind of wedge on the lower time frames, right, that everybody's looking at. And that's going to be the deciding factor to me. Like, if we don't defend it in the next 2 days and break right through it, well, this was pretty much, I will give you guys an example of something very similar that happened to the weekly chart, right? We were looking at this guy right here.
Yes.
Remember this? Just before the whole...
Oh, that was such a beautiful trade.
So what happened here, okay, going back to what happened during this candle, the entire week, the candle was living above the Tenkin, above the Kijun, right? And we were green. 12 hours before the week could close, this dump happened. This all happened 12 hours before the week could close.
Less than 12 hours.
Yeah, less than 12 hours.
Less than 12 hours. This is right before the day could close that day.
Because I went to bed with this still green. I woke up and this had happened. It was like probably the most insidious thing that you could happen, right? Because you're relying on all of this to get defended, and it doesn't right before the week could close. And if you guys do remember, this is where I closed out all of my positions, right?
Yes.
So I had gone long right over here at around 8,200. It was the same trade we took over here all the way to 10,300, added on to our existing position, blah, 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 right? I took the same trade again. And that's what trading is about, taking the same trades over and over again and winning out in the long run. But what was my hypothesis? That we're likely going to bounce and close over the 21 EMA.
Yes.
Like we did over here. Remember, look at this candle right over here. Bounced and closed over everything, Tenkin, Kijun, and the 21.
And inside the cloud.
Yeah, and inside the cloud. What do we do over here? Okay. We closed over the Tenkin, but not over the Kijun, not over 21. And then I'm like, okay, I'm going to be scaling out my position. Yes, we had a good defense of the Tenkin. Doesn't matter. I stayed true to my hypothesis, guys. And this is where you see it paying off, because I start scaling out of my position as we start taking major levels, hitting major levels towards the upside. Okay, so 8,700, 8,000, blah, blah, blah. As we had this candle go up, and people were telling me, Sean, you're bullish, man. Why are you getting out of your position? You're on profits. The way I saw it was the market is giving me a gift to get out in profits on a trade that I was wrong on. I was wrong on this trade, but I got out in profits, right? And being wrong on a trade isn't a bad thing, okay? I got invalidated. Market's giving me a gift. I'm taking it. If we close over here, maybe I was wrong about being wrong.
Yeah.
Okay, fine. Didn't happen, right? Didn't happen, and I was rewarded for being disciplined. Now again, could we be doing the same thing over here? Does the monthly actually close underneath the 21 EMA? Right? This is why I'm not rushing to go long over here.
Yeah.
But at the same time, we have taken over weekly levels and high time frame levels, 4-day 200, 3-day 200. So I'm not going to be waiting only for the monthly in this case, because the monthly is usually a very, very long time that you have to wait. But it's very interesting to see how this unfolds, especially coming in the next weeks where we have a major event.
Yeah. And I think a good lesson can be taken from your trade actually on that weekly close, where your hypothesis was null. So there is something in just, when you walk into a trade, have a plan. Like, it's so important, because then it's so easy for your emotions to kick in and give you a reason to stay in your trade, even if your trade has been invalidated, right? And then you'll find some freaking reason to hold on, even when it's in a loss now. So now you're sitting in a losing position, and you're finding reasons to hold on because now your emotions have taken over.
So this is why when people talk to me about ask me about risk management offhandedly on the YouTube comment section, or even in the Mango Grove, I can't answer that question in a few sentences, guys. There's so much to it.
Yes.
5.5 hours on that risk management module.
Exactly. Oh, man.
Like, people thought that, this was going to be a long module, it's going to be a waste, blah, blah, blah. But anybody who starts that module, they realize how much information, golden information is in there, right? Because that is the base of everything. Everything in your trading life can be solved with a proper holistic approach to risk management. And people make it all about stop losses. It's not about stop losses.
Yeah. But so now this is the monthly. So we close the monthly in about 2 days. Okay. Now you just mentioned something earlier about that daily pattern. Of course, we have to get to the patterns. So let's get onto the daily time frame, because there is that rising wedge, I believe, is still intact. And look at that. So I don't like that daily 200. I feel like price almost never plays off of it well. But this is the rising wedge. About to mark it out for you. I believe it's this. Okay, that is the bottom trend line that marks, the bottom of the wedge. And there's this. Okay. There's volume supporting volume profile as well. So you're looking for the descending volume profile. So if you just switch on your volume, you'll notice the descending volume profile as well. So this is a bearish pattern. Okay, on a more technical standpoint, it is a bearish pattern. So if it breaks, so now the monthly 21 EMA.
It's not a bearish pattern until it breaks.
Until it breaks. But the monthly 21 EMA is sitting at what again? Let's just go back just for a quick refresher on that. It's at 7,350. Back to the daily. Let's go and look at that pattern. 7,000. Okay, so I mean, we're
really
not
high up.
We're not far
We could
off.
break up from here. Right? And be careful. Like, look at the daily. I think we closed the daily above a major. Zoom out.
Zoom out.
Yeah. It's can I?
Is that the level?
I'm looking at this guy here, right? So if you're looking at this, these candle closes, if you're looking at this as the entire range, You can be really conservative and take the highest candle close, right? And this was legit, because I don't know why people ignore this candle close. They're like, this is a deviation. I don't think so. Like, we broke and we retested that level, and did we close above it? Oh no, we have not closed above it. Okay, never mind. Okay, I'm not paying too much attention to the daily, but that is a major level. Okay.
So what I'm finding really interesting right now is that, so now this is a rising wedge, and you're right, this is not a bearish pattern until it breaks. You have also driven the emphasis on that in your trend analysis module. So that's that. But I'm noticing that when you look at Bitcoin and you're looking at the other altcoins, I'm noticing a similar rising wedge on some other altcoins, and one being, so now we had some market leaders, right?
XTZ.
So we have XTZ, we had Link, and I believe it was BNB. But I want to look at Link for a second, because I also noticed a pattern on Link. Where's Link here? Okay, now it was a similar rising wedge. Do you see it? Which I believe did break to the downside.
Ooh.
So we had something like this. So I caught this in one of my analysis videos, and I'm like, this could be, something at play. And what if there are certain, leading indicators?
Well, what about XTZ? It broke to the upside. It's same rising wedge. It's right there underneath.
Oh, sorry.
Underneath Link, yeah.
There we go.
It has a rising wedge that broke to the upside. So what do you do?
So it's a
what if you guys just played the horizontals that I've set for you guys, right? Look at even the cloud horizontal. Just play the horizontals. Broke the horizontal up, you go long, right? If you want to, again, not financial advice, but this is why diagonals can kind of be misleading. There's so many ways to draw it. But if the way I like to do it is you break one level, then you look towards the next level, blah, blah, blah. You can have certain lines in the sand that, hey, as long as we're underneath this level, I am staying bearish. As long as we go above that level, I am bullish, blah, blah, blah. So keep it simple, in my opinion. Do it the mango way, do the stress-free way. The last thing you want is to wake up in the morning and adjust your diagonal after you're sitting in a loss. Be like, maybe I'm still right on this trade, right? And this keeps going up. The wedge just keeps going up and up and up and up. You don't want that. You don't want that. Remember, this particular trade that you're sitting in right now is irrelevant. It's about all the trades that come after it as well, guys. Let it go. Let this trade go. And then think about having enough freaking capital in your account for your next trade. If you let this one trade eat all your capital, what about the next trade? What about the Link trade that is waiting to give you a good 120%? You're going to let Bitcoin eat up all your capital because you're stubborn? Don't do that.
Yeah, but no, that's good advice, guys. Good advice. And I noticed something with diagonals. Like you said something, I'm pretty sure it's going to hit home with many of you, where you're sitting and adjusting your diagonals to suit your bias, right? And that happens quite often. That's why I absolutely hate diagonals. I don't know about you, but but coming back to Link, I know this is for the Link fanboys and girls. What do you think is happening with Link? Now, what I was looking for a more bearish sort of outlook was I was looking for Link to basically start using that 4-hour 21 EMA as resistance, and we have been doing that, right? So if this pattern actually has to play out, I am looking for Link to come down to, if it does have to meet the measured move, okay?
So my horizontal right there.
There we go. And this is really good. When it usually meets with that horizontal, when there's confluence there, it's got a strong probability of it actually coming down there, right? And playing out, getting...
And it's even better when it confluences with somebody else's levels, right? So that's why we have our communities. That's why we have Mango Grove, etc., etc. Even in Mango Seed, when we see all of us being on the same side of the trade, it doesn't need to be because of the same reasons, right? But we're seeing that two different ways, we're on the same side of the trade. Like, she just drew this measured move, but this is my chart and my horizontal. She probably may or may not have it on her chart. So when we see the same trade ideas, we pay attention, right?
And I feel like, that's a good way to kind of...
So if we break into the cloud, it lines up with the move down to the bottom of the cloud as well as 200 moving average. That's where the horizontal is.
And I believe there's something there on the daily, right?
the 21 EMA and Tenkin are coming up pretty close.
Yeah, so watch out for that, of course. I mean, there are measured moves. There is, of course, resistance, support there at $2.92. However, there are still, levels of support that Link needs to clear in order to confirm a further push to the downside. So take note of that as well. And is there any other altcoin that you want to talk about?
You can look at XTZ.
XTZ. Yes, a lot of eyes on XTZ, and rightfully so. So yeah, I haven't been looking at XTZ, so what are your thoughts on it?
It's getting picked up. Like, it got picked up right there. Like, it had its move towards the downside. And I believe that was major. That was the neckline. So look towards the left over there. Right, you see that neckline, that toppy formation?
This right here?
Yeah, just put a horizontal there. You see it got picked up on that major neckline. So that's bullish. As long as it keeps holding it, right? So the trend is still intact. Like, it's if we take out that wick, then maybe, but there's too much. XTZ has done too much to the upside for the bulls to feel too much pressure, and they've broken into a major level. So you see these kind of things happen. Okay, so we've been talking about looking for hints in the market for a while.
Yeah.
We don't need to be playing those hints, right? We don't want to be front running anything. Depends on your risk appetite, of course. We talked about how we saw BNB make a deviation of bifurcation from what the rest of the market was doing.
Yeah.
Right? We talked about how every other asset was correlated to Bitcoin, and we showed the chart where BNB had almost zero correlation to Bitcoin, and that's what happened when markets reversed back in after the crash in November 2018. So when we saw that first hint, we brought it up and we were like, okay, we'll keep an eye on this. And then look at that. Look how things are unfolding. Then we had Link have its move. Then XTZ is having its move. Then Bitcoin's breaking major levels.
Yeah.
So we saw those hints. So is it appropriate when you're seeing so much evidence saying that, hey, maybe the markets are turning around? Is it appropriate to be bearish? I don't think so. Is it appropriate to be bullish? Maybe you are looking for more validation. Maybe you're not. It depends, again, on your thesis, on what information you're looking at. Okay, so that's what I want to point out. But breaking major levels, man.
That's true. And so, I mean, this is just crypto, but I believe that this is also true. This holds true for, well, the traditional space, right? Sorry?
SPY, I guess. I haven't been looking, but I think SPY broke on the weekly.
Yeah.
Look at the ES futures, actually. I looked at that chart just before, the one underneath CAD USD.
Okay, where is that? Okay, there we go.
Now switch on to the weekly.
The weekly.
Again, look at the high time frames.
There we go.
And just put a horizontal right underneath those candle closes.
Right here?
Yeah. It's holding a major level right there. You can see it.
Damn.
Okay, so all of these are just clues. Okay, it depends on what you want to do with it.
So, I mean, it's a confusing picture right now, and I don't blame anyone who is, like sitting back and be like, what in the bloody world is happening right now? Because, I mean, the charts, this is painting one picture, right? But then when you look outside, every time I walk outside, I'm just like, are you serious? There are lockdowns everywhere being extended. There's unemployment everywhere. People are talking about, once again, people are still comparing what is happening here to perhaps the Great Depression, 1929, right? So what are your thoughts on all of this, like unemployment and the comparison? Where do you think this is going? Now, the number one thing that a lot of people, now this has come up on Twitter a lot, people are looking at, in the future at least, stagflation.
Okay.
Right? So what are your thoughts on that? And for those people who do not, understand stagflation.
Before we talk about stagflation, I do want to talk about this entire idea of the 1930s. I've been, since the start, whenever people brought that up, I've been against that idea. Well, not fiercely against it, of course, because you can't be too strong in any of these ideas when it comes to how the economy works, right? Especially macro stuff. But the most evident thing to me was that there's so many financial tools now available that we did not have, and the biggest one was how drastically would the Fed intervene. Yeah. So we saw in 2008 that they intervened with crazy amounts of money printing, but it took 3 months for them to get all those approvals, right?
That's right.
Which is why, like, perhaps why the markets took so long to recover. Or I think if you go and date back, you'll see that the markets actually started recovering when they started being sure that, hey, all this monetary, all of this money printing is going to happen for sure. And basically they did not want to fight the Fed. Now this idea, fight the Fed, if you go back and read all the history books, okay, when did it really start happening? I think 1987 flash crash.
Yes.
Could call it the flash crash, I guess, but basically when everything went down, Fed intervened, and that set the precedent, I think, back then, when you know what, we'll always have the Fed backing us. So now everything became more about financialization first and industry second. And I think that's where I was wrong too in my view of the world. Right, when we're looking outside, we're like, everything's gone to shit. But if industry is second and financialization is first, all that matters is what the Fed does. It used to be the opposite, right?
Yeah.
Where the finance industry would respond to what's happening to the world.
Yes.
Now it's the opposite, where the industries are responding to what happens to the what's happening to the finance world, right? So the finance world does something, and then the industry has to respond, which is sad. But this is why they say, do not fight the Fed, do not fight the Fed. And this is where TA comes into play as well, right? If you have a clear line drawn in the sand that above this level, I am wrong, and the Fed is winning, you get out of your trade. Very, very simple.
Exactly. It kind of keeps the picture clear.
Yeah, you get
right?
it's stress-free, guys. That's why I'm a fundamentals guy. You guys all know that. If you guys have been following me for years, I started off with fundamentals, but I wanted a stress-free approach. I don't want to always be wondering, am I really right on this trade? What if I'm right? I don't want to be worrying about that. I want a clear line in the sand. Get out, get in accordingly.
Yeah.
So yeah, based on the reason I'm bringing this up is because people are talking about economic reality will set in. We don't know when that economic reality will really set in, right? And you don't want to be front running that. You could have a thesis on when that may happen. If you're wrong on that, just get out.
So coming back to the topic that I was speaking to you about, so
Apologies.
Unemployment and people, now the latest, narrative, future narrative at least, is stagflation.
Okay.
So first explain to them, what is stagflation?
What is stagflation? Okay. So this is one of the things where I think a lot of confusion comes from how people explain it, and especially to the layperson can be very confusing because they approach it through a more... Okay, let's start simple. Let's start with something we all understand. Okay, stagflation. Let's start with productivity. Okay, we typically the economy has two scenarios. Okay, two scenarios, and we'll use productivity as a hinge to explain the two scenarios. If productivity is high, we are going to have better GDP, correct? Does it make sense?
Yes.
If people are more productive, GDP should go up.
Yeah.
Okay, so GDP is going up and productivity is increasing, prices should go up. You understand why?
Yeah.
Okay, so if GDP is increasing and there's more productivity, people have more jobs.
Yes.
Okay, so there's your employment. So instead of saying unemployment, let's use the word employment. Okay, we use the word employment. So if GDP is going up, productivity is going up, that means employment is going up, people are being more productive, right? That means they're employed.
Yeah.
Correct? So employment is going up, GDP is going up. If people are employed, they're all earning more money, correct? Yeah. So if everybody's earning more money, everybody has more money, and everybody wants to buy with that more money, we have goods that are being chased by more money. Yeah. So if there's more money chasing goods, prices go up. Okay, so we have a situation where GDP is going up, employment is going up, prices are going up. So this is inflation. Okay, this is your typical scenario that central banks want. This is debated by different parties. I don't care, but we just need to understand it as market participants. They want this because they want inflation going up at a steady rate, not too much. Okay, steady rate, because it's good for the economy. Why? Because money is flowing more.
Yeah.
Okay, that's your first scenario. Okay, you have all of these three conditions. You have GDP going up, again, employment going up, and inflation going up.
Yeah.
I'm simplifying, guys. Okay. Simplifying. We do it that way in Mango to keep it stress-free. Now, a second scenario, okay, this is the bad scenario where GDP is going down. So productivity is going down.
It's
Again,
going
we're using
down,
productivity as a
yes.
hinge. So productivity is going down. So GDP is going down. What does that mean? If productivity is going down, it means people are working less. They are unemployed, right?
Yeah.
So remember, using the word employment instead. So employment is going down.
Yeah.
Okay. So we have GDP going down, employment going down, and that means people have less money to spend.
Yes.
So we have less money chasing the goods. What does that mean? Asset prices go down. Okay, so this is your recessionary environment. Here you have your inflationary environment, here you have your recessionary environment. Two scenarios. So the central banks essentially had tools for both scenarios. Remember, over here, everything was going up.
Yeah.
Inflation, GDP, productivity, everything, okay?
Yeah.
Inflation gets out of control, apply interest rates.
Yeah.
Done. Over here, we had everything going down.
Going down, yeah.
GDP, employment, everything going down. It gets too bad, decrease interest rates.
Yeah.
Cool. But now, what if you have a scenario where you have a little bit of this and a little bit of that? That's your stagflation. So let's think about a situation where you have inflation going up, okay? But we have employment going down, GDP going down, so the economy is in decline, people are less productive, but inflation is going up, okay? How do you deal with this? Because all asset prices are going up, they're in a frenzy, they're going up, okay? If you try and increase interest rates, you are basically throwing water on the fire. But you need to throw kerosene on the fire to stimulate the economy on this side. So what do? Throw kerosene to stimulate these guys over here. Employment is down, GDP is down, but your inflation is going high.
Yeah.
What do? So you have a stagnant economy on this side.
Yeah.
But you have inflation on this side. Okay, so stagnant economy on this side, inflation on this side. Stagflation. There you go. I think
Isn't he really good at this? Like,
so that's a good way
crap.
to think about productivity first.
Okay, so
Question is now, why is this happening, right? Tell us, Kusha.
why is this happening? Right, I mean, QE. I mean, I want to show you a graph, okay? Now, this is the quantitative easing net asset purchases for G7 central banks approached $1.4 trillion in March alone. And guys, this is going to go up, okay? This number is going to go up. So, everyone's been printing right now. Everyone is going through QE. At least the top G7 central banks are going through QE. And that's why prices are going to go up, right? I mean, there's a lot of this new money being pushed into the economy that people are getting laid off. People are getting laid off, and even those who are not laid off because of the lockdown, they are sitting at home, so they're not earning anything.
Yep.
So there's that factor over there that's going to, so prices are going to go up of assets, new money, right? But there's no productivity. No one's working. People are getting laid off. They're unemployed. Hell, some corporations are actually asking their employees to take a voluntary pay cut.
That's not a good sign.
That is asinine. If you are someone who's gone through that, or
would you
know
do that?
of someone who's gone through that, I want to hear about it. Mention in the comments below. Like, I think that would be.
In what circumstance would somebody say, "I will take a voluntary pay cut"? Yeah, sure. I'll take a hit for the team.
And I mean, it's what's even more weird, and it makes no sense. It's ridiculous. Is that a lot of this quantitative easing, all this QE, I mean, it's going to companies. Everyone's getting bailouts. So okay, one big company, and guys, these are big corporations asking employees for this. Okay, now they're getting all this bailout money, and then on top of that, they're going to their employees and asking them if you would like to take a voluntary pay cut. Yeah. Are you serious right now? Are you frigging serious?
So out of all of this QE money, most of it is going to the corporations, and on top of that, they're still going to cut wages. I told you guys this was going to happen like years ago. I mean, not years ago, weeks ago, right? But I was talking about this years ago too.
So then, does this lead to a depression, Sean?
I don't want to make any... I don't know what this is going to lead to. All I did here was explain stagflation for you guys, right? So this is the way I'm seeing it, right? When you're playing poker, you have certain number of cards in the deck. You know those cards that are in the deck, and you play your hand according to the probability of those cards unfolding, correct? When the Fed comes out and starts breaking the rules, okay, and starts adding new cards to the game, how do you play? How do you play? So you don't know what could happen if they introduce a new card. So you have your ace of spades, your king of spades, and your queen of spades, right?
Yeah.
And they introduce a card only to the spade suit, okay? called the Fed of Spades. How do you play? And the Fed of Spades applies only in certain scenarios. You don't know those scenarios. You don't know the scenarios either. How do you play? Right? So that's the situation I think we are in. It's really hard to know what could happen. And depression, what does that even really mean?
Everyone's depressed.
That is happening. I'm seeing that around us. So.
People are going to start hoarding their money, and and there's just a lot. And I mean, for the stagflation, you said that interest rates was a big part of inflation and deflation, right? But what if they reduce interest rates to promote more spending, so people borrow more to spend? That way it meets the rise in prices, right? So stagflation. But question is, aren't we already at zero?
Yeah, well, we could go to negative. We already have countries doing negative, Krisha. So it's not going to be too surprising. Yeah. I don't know whether the states would do negative. I don't know, but I think a lot of countries may go into negative over the next years. I do want to talk about that though. The stagflation, that even if it does happen, go back to your chart. So all of this money that was printed, right? Damn, that's a lot. All this money that was printed, it's not going to come into the economy immediately. It kind of goes to all the big players first. They get to buy all assets at the cheap prices, okay? And then the asset prices go up, right? Like we're seeing. And then it will start entering everybody else's accounts after everything's already gone up.
Yes.
Okay, so this happens over like a period of a year and a half, 2 years. So we're not going to see huge inflation immediately. Yeah. In fact, I think in a situation like this, not everybody wins, okay? The Fed is not going to bail out every single company. So we're going to see some defaults. We're going to see companies go out of business. And it'll be sad if it is the small businesses that are going out of business. I really don't want to see that happen, but somebody's going to lose. Somebody's going to lose in this, okay? It's
so
a game.
Far, I mean, it seems like everyone's being bailed out, right? As in, apparently there was the recent news was they were bailing out households as well over, a member.
You can't bail out productivity.
That's true.
Like, everybody can talk about it, right? But productivity is gone. There's going to be a hole. Somebody's going to pay for that hole, right? And it could show its form in so many ways. This is why it's such a hard situation to try and predict and be certain of. Anybody being certain is, I think, don't hold on to any belief too strongly right now. Okay?
Yeah.
Okay, that's what I can say. But we could have deflation first and then inflation later as well.
Yeah. But playing the fundamentals right now is going to be very, very tricky because of the amount of just random announcements of stimulus for random players in the market, and it's just like shifting the game too much.
How would you defend against inflation?
I'll park all my money in assets, real estate, Bitcoin.
There you go. This is what Bitcoin was created for, by the way, guys. Bitcoin, gold, real estate is not a bad idea. Another thing that you could do is just things that you are going to buy anyways, right? Just buy ahead of time before those. Because, like I said, we talked about a loaf of bread being freaking $50, $100. It could happen. No, it wasn't this. I was having a conversation with another group of friends. I don't think we talked about it. I don't think so.
No, not on.
No. But just go back in time and see how much bread cost in the 1970s, okay, or 1950s. And what inflation have we seen in the cost in the loaf of bread? Has it gone from 20 cents to $5? I know in Canada, it costs us $4.75 to buy a multi-grain bread, right? So we've seen inflation on that, but now we've printed enough money for a good 30, 40 years worth of inflation, right? Do we see all of that happen immediately? $50 for a loaf of bread? So you can't buy bread though, right? But you can buy toothpaste. You can buy a lot of toothpaste. This sounds so silly, but I remember once Mark Cuban talked about this years ago, like 5 or 6 years ago, and I'm like, that's so genius. He said, people are always looking for yield through the banks, but you can find yield in like the stupidest places by going to the grocery store and buying a lifetime amount of toothpaste. Okay, if you get toothpaste for 50% off, and buy a lifetime, that's 50% savings.
That makes sense though, right? These are all like everyday items you use, and you use it on day. It's not like you're going to stop using toothpaste.
And that's
right?
Over long term,
yeah,
that's 50% yield for you, right? It's lifetime supply of toothpaste, but then you got to store it, blah blah blah. But
I mean, but you know what? All of this, it'll be very interesting to watch how this plays out, because I feel like there's one glaring sort of difference between what is this QE, okay, and the one that happened back in 2008, is that the one that happened back in 2008 primarily went to Wall Street, okay? It was all the corporations, but a part of this $1.4 trillion has been dropped directly into people's bank accounts.
A part of it.
A part of it. I mean, but still, I mean, it'll be kind of, and we don't know how far they are willing to go with the stimulus, how far they're willing to help just your regular households.
Okay, so the USA will do this. What about the rest of the countries? They can't do this. They can't just print unlimited amounts of money.
Yeah, I mean, there's all this monetary policy.
Everybody's too focused on USA, which is fine. They do drive the world, but we are in a globalized market.
Yeah.
Okay, think about that. And globalization is deflationary. Once we lose globalization, we are going into inflationary environment. So everything goes up, wages go up. You guys need to understand, because of globalization, a lot of things have become more affordable than without it.
Yes.
So there you have another inflationary pressure.
Deflationary pressure.
No.
Right? Because prices go down if...
with globalization. Now that we're losing globalization,
right,
we are going to go into an inflationary environment.
Yes, yes.
So we have that too. Okay, so we talked about how money supply is one of the reasons we could have deflation, and you showed the chart to them. Sorry, not deflation, stagflation.
Stagflation, yes.
Another reason you could have stagflation is because of a sudden supply shock. I think in the 1970s we had stagflation because of oil, right?
Yes.
There was a sudden supply shock because it became that much more expensive to pump out oil.
Yeah.
Now it's going to become that much more expensive to make goods across the world, because you don't have those global alliances anymore. And we can go in and talk about why globalization is falling apart as we speak, but I don't think anybody's going to be too surprised if you just look at what's happening, right? But that's another long conversation.
Yeah, so we'll leave that. I mean, that's going to be an interesting conversation, though, because that would directly affect unemployment. But we will leave that for our next duo video. But yeah, I mean, you have our input on the fundamentals and the technicals. It'll just be very interesting to watch everything play out. But as for Bitcoin right now, I mean, he's standing on the cliff. I'm looking for, to start building a long position. Of course, slowly, I will wait on that monthly close. But it's right now, the only clear picture is on the chart, at least for me.
So what if the monthly closes underneath the 21 EMA? How do you play this?
Then I'm not gonna go long. I'm gonna wait on the cliff with you. We can hold hands on the cliff. Right? I think that'll be the most kind of prudent thing to do.
It's funny that we watched Aladdin, where you watched Aladdin for the first time yesterday.
He's never gonna let me live that one down, guys.
No, because now that we're talking about all of this in terms of the macro, what's the song that hinges that entire movie together? A whole new world.
And I think we're actually going to be stepping into a whole new world. Same pinch. No, okay.
That should be the title of this video.
Yeah, a whole new world. But all right, guys, this is it. I hope you enjoyed this video. Sean, any closing notes?
No, none whatsoever.
Trade safely, trade stress-free, trade the mango way, trade the easy way, guys. Ciao.